So let me ask you a question. What if the safest thing you think you're doing with your money, saving it, is actually costing you? It sounds a little crazy, right? But why do people who save and save diligently often end up with less financial power over time? We're going to break down that paradox right now.
So let's be real. Is your money really safe just sitting in a bank account? Or is there some invisible force, kind of like a slow leak, that's draining its value without you even noticing? Stick with me, because understanding this is going to completely change how you see your money.
Okay, first up, we have to talk about the savings security myth. This is the foundation of pretty much all the financial advice we get growing up, right? It's the story we're all told about why saving money is the number one thing you can do for a secure future.
And you know these golden rules by heart. Save your money, keep it safe, don't take any risks. The whole point is to build security, to have a safety net for emergencies. And look, on the surface, this sounds like the smartest advice in the world. And for a really long time, it was.
But here is the thing, the one detail that most people never hear. This traditional advice, as solid as it seems, completely skips over a huge hidden cost. A cost that can quietly and systematically undo all of your hard work.
So, what is this hidden cost? Well, it's a silent thief, and its name is inflation. This is the invisible problem that is always working against you, shrinking the real value of your wealth, even when the number in your bank account looks just fine. To put it super simply, inflation just means that over time, the price of everything, your groceries, your gas, your coffee, goes up. And because of that, every single dollar you have buys a little bit less than it did before. The money doesn't disappear, but its power, its purchasing power, it just fades away.
And this is what leads to a super common and frankly dangerous way of thinking. You look at your savings account, you see the balance is the same, maybe it's gone up a few pennies from interest, and you think, great, I'm not losing anything. But what you're losing isn't the number of dollars you have. You're losing what those dollars can actually do for you.
Let's make this real with something I call the coffee test. Think about it. 10 years ago, a $20 bill could probably get you, 5 cups of decent coffee? Easy. But today, with prices being what they are, that very same $20 bill might only get you 2. The bill looks the same, but its power has been sliced in half. That, right there, is inflation in action.
And this slide really shows you why the old rules just don't apply anymore. Go back a few decades, say to 1976. Back then, it was normal for the interest you earned in a savings account to be higher than inflation. That meant your money in the bank was actually growing in real-world value. But jump forward to today, and it's the complete opposite. The interest you get from saving is way below the rate of inflation, which basically guarantees that your money is losing its buying power year after year.
Now, hold on, because inflation is only half of the story. There's another hidden cost, and honestly, it might be even bigger. I like to call it the price of standing still. It's what you lose by not putting your money to work. In finance, this is called opportunity cost, and the idea is simple. Every time you choose to do one thing with your money, like putting it in a savings account, you are also choosing not to do 100 other things with it. And when you choose that safety, you are missing out on the potential growth you could have had from something like investing. I want you to think about this like you're standing at a fork in the road. Path 1 is the path of the saver. Down this road, your money just sits. It's safe, sure, but it is completely idle. It's not growing, it's not working for you, and it is definitely not multiplying. But then there's path 2, the path of the investor. On this path, your money is actively put to work. It's in assets like stocks or businesses. It isn't just sitting there. It actually has the potential to grow, to create more money, and to multiply over time thanks to the magic of compounding. And this chart, wow, this chart shows you just how gigantic that difference can become. Just look at this growth gap. If you saved $10,000 and earned a pathetic 0.5% in interest, after 20 years, you'd barely have more than you started with. But if you invested that same $10,000 and got an average return of 7%, the difference is just incredible. That huge gap you see, that is your opportunity cost, right there in plain sight. It's the real price you pay for standing still.
So you see the math. It's crystal clear. Why do so many of us still choose saving? Well, the answer isn't on a spreadsheet. It's in our heads. It's all about psychology and the powerful, emotional reason that safety just feels so good. The appeal of saving is just so strong. It feels totally safe, right? Because the number in your account never goes down. It's simple to understand, you don't need to learn about markets or anything complex, and maybe most importantly, it helps you avoid that immediate gut-wrenching feeling of risk you get when you see the stock market drop. But here's the crazy paradox. In our quest to avoid all that visible risk, we can actually take on a much bigger, invisible one: the risk of falling behind. The risk that our money slowly loses its power and our financial future just never gets off the ground. The risk of not growing. So listen, the point here is not to stop saving, not at all. It's about building a smarter financial system for yourself, a system that knows how to balance that critical need for safety with the absolute necessity of making progress.
Here's a really simple way to think about it. You need a two-part strategy. Your savings, that's for your short-term security. Think of it like your financial shield. It protects you from emergencies. But your assets, your investments, that's for your long-term growth. That is your financial engine. It's the thing that actually moves you forward and builds real wealth.
And all of this brings us to the real path to wealth. This is the core lesson that, for some reason, most of us were just never taught in school. It really all boils down to this one simple, powerful idea. Saving is defense. It protects what you already have. Investing is offense. It's how you build the future that you actually want. And to win this financial game, you absolutely need both a great defense and a great offense.
And that's exactly why this is so important to get. If you are relying on saving alone, you are only playing defense in a world where inflation is constantly pushing you backward. You might feel like you're holding your ground, but in reality, you are falling behind. So I'll leave you with this one last thought to chew on. In the world we live in today, is saving money still that safe, responsible strategy we were all raised to believe in? Or has it slowly turned into a kind of financial trap for people who don't understand these hidden costs? I'd really love to know what you think.